Hi, I'm Alex. Welcome to the channel and thanks for tuning in. So this morning, pre-market, High Tide filed a 40F with the SEC. Now, this is a big step towards affecting the Nasdaq uplisting and is good news for all investors in the company. In this video, we're going to explore exactly what that means, why it's important, the possible impact on the stock price, and what's next. I also have a very good feeling that we're going to be seeing a lot from High Tide this week, so keep your eyes peeled. I'm also going to ask you for the same favour again that I have done in the last two videos. In our battle against clickbaity thumbnails and titles, please smash the like button and help the algorithm learn that we don't need this within finance and investing YouTube. Long run, it's not helpful for the community, it's misleading, but ultimately the algorithm loves it. It's not something I will ever do on this channel. In the last two videos, I have asked you for this favour and it's been amazing. We've had the highest like to view ratio ever on the channel and the algorithm seems to be sharing it more widely. So thank you so much for your help with this. Please keep it up. If you're new to the channel and you like investing related content, then hit that subscribe button. If you're interested in more content, live video calls, the private Discord and other stuff, then check out the Patreon group. And as always, whilst my full-time real job is investing related, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So, the 40F filing, what is it? Well, it's a filing which all companies which are based in Canada but have shares trading in the US must complete. It's not required when stocks are OTC or not main market listed, only when they're on a main exchange like the Nasdaq for example. The filing's pretty much like an annual report. It gives an overview of the company, its financial performance, and it's all on the accounting basis that's accepted by that main market and that exchange. In the case of the Nasdaq, this is reporting on an IFRS basis, an International Financial Reporting Standards basis, rather than something like locally accepted accounting policies. Ultimately, this filing is great news. It's another step closer towards the Nasdaq uplisting, and it's a clear sign that the company is progressing this and taking it seriously. Now, before we jump into why this is important, it's also worth reminding ourselves that the company needs the stock price to be trading above $3 for it to be able to list on the Nasdaq. To get there, the most likely strategy that the company can follow is a reverse split. It's important to note that this has been approved by the board, and this is likely to be the mechanism which they use to get the stock price to the $3 target it needs to be at. A really important reminder here that this does not actually change the valuation of the company. It is just an optical strategy to deliver that minimum required stock price for the uplisting. So talking through a fictional example, say a company has a stock price of $1.50 and it does a 2-for-1 stock split to increase its stock price to $3. If you own 100 shares, they're worth $150. Post-split, you would have 50 shares in the company, but that would still be worth $150. Despite optically the stock price having increased by 100%, the overall market capitalisation of the company is unchanged. Now this is a really important point for people to keep in mind. So anyway, why is this good news? Well, firstly, the uplisting to the Nasdaq from the OTC markets increases the number of potential investors who would and can invest in the company. This is true from both a retail investor perspective, but also, more importantly for valuations, it enables institutions to come in to invest in the stock which otherwise weren't able to. Oftentimes, some institutional investors are restricted from investing into OTC or foreign listed stocks, but this potential move and an uplisting to the Nasdaq would enable a wider audience of potential investors to buy shares in the company. Increased demand for a company's stock is always good news for the price. The second positive that an uplisting would bring is that it would provide more liquidity within the market, more investors buying and selling the stock, which again is good news for the stock overall. Now the third positive is that being listed on the Nasdaq also creates more opportunities for High Tide to be included on different indexes and tracker funds. Whether these are sector-specific ETFs, whole index tracker funds, all of these drive an increase in demand for the shares, and again, this is positive news for the stock price and should have a positive impact on the stock price. There actually also is an interesting dynamic here too, that with the continued growth in the stock price drives a continued need for these tracker funds and other funds to acquire more shares to ensure that the balance of their holdings are correct across the whole fund. It almost becomes self-fulfilling if the stock price does continue to outperform the market. This then drives a greater need from those tracker funds to rebalance and acquire more shares in High Tide or whatever stock it's tracking, thus driving up the price further. Now this is not a dissimilar dynamic from what happened when Tesla first got included on the S&P 500. Lots of index and tracker funds had to start building a stake in Tesla, which created a surge in demand for the stock and pushing the price up higher. Now clearly that won't be the same magnitude here, but it definitely is an important consideration. Now, the final reason why I'm so excited about the potential uplisting is the potential it brings to High Tide to help accelerate its M&A strategy globally. Now, I'm not going to discuss here how accretive the deals the company has done to date are. I've discussed that a lot and will address that later this week again. However, this is a really important dynamic to remember here. Much of the consideration they pay for the companies they're acquiring is in High Tide shares. In fact, 75% of the price paid to the smoke cartel shareholders was in the form of High Tide shares. Now, digressing slightly, this is clear confirmation that they believe in the significant value of the business combination and that they have strong conviction in the business going forward. Being listed on the Nasdaq enhances this offering further. It will enable High Tide to unlock more US acquisition opportunities and also acquisition opportunities in other international markets too. It is an easier and more palatable opportunity for the companies which are being acquired to be paid in the stock of a Nasdaq listed company than one that's listed on a non-main market exchange as High Tide currently is. Rightly or wrongly, a main market listing like being listed on the Nasdaq gives the company a greater degree of authority and a better perceived reputation. All that being said though, the job they have done on M&A to date is pretty remarkable. They're paying much lower multiples for great quality companies that on day one drive incremental shareholder value and have real synergy potential on day one too. So ultimately, what does this mean for the stock price and what's next? Well, in the current market it's impossible to say for sure. Now I don't want to sound like a broken record here, but this is a long-term investment. Movements in the price, whether positive or negative in the short term, shouldn't be concerning you. A reverse stock split will drive an increase in the stock price, but as we know, not the valuation of the company, so it's important to keep this in mind. Clearly though, the positive implications and what can come from the Nasdaq uplisting are likely to drive an increase in the stock price, so it will be interesting to see how this does develop this week. I'm also really excited to see what else the company has for us this week. I'm quite excited and I think we could see some really interesting news from the company that should have a positive impact on the stock price. What I will say though, however, is to remember that this is a long-term investment. You should not see this Nasdaq uplisting as a catalyst for your full exit of your position. The strategy and opportunity here that High Tide has goes way beyond this simple Nasdaq uplisting. You don't want to exit a position entirely, which in the coming years grows to become many multiples of what it is today. A company that's commanding a market-leading position in a massive addressable market that's delivering consistently strong growth. So I'm calling for patience. You have to be patient here. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, don't forget to subscribe. Check out the Patreon page if you want more exclusive and extra content. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's different perspectives, so please get involved. Thank you so much for watching, and I'll see you in another video.